Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. And if you're looking for more videos from Ned and myself, check out the FXDD YouTube channel right here, where we upload all the live webinars, educational and trading webinars, and also the video analysis looking at specific currency pairs and trading ideas. All right, as always, we start with the euro dollar 4-hour chart, and I was looking at the fact whether price could indeed continue with this downtrend because price bounced at the 88.6 fib, and I was wondering if that could not be maybe a reversal spot. If, of course, price with a strong daily candle broke below 111.80, that would change things. So what happened? Well, basically yesterday, price indeed did not break through 111.80, which I was always hinting at in the sense that I was looking for an ABC pattern to the upside. That has not happened yet. Price did not break through 111.80. No daily candle that could even break through the 88.6 fib. Small candle actually yesterday, very low price movement, small price movements, low volatility, but maybe a double bottom at the 88.6 fib. We have two candle lows now at this moment, right at that level. So if we take a look at this 4-hour chart, it looks like a double bottom pattern to me. Here we have 1, 2, 3, 4, 5, 6 candles not breaking low, actually 7, 8, 9 now at this moment. From a time pattern point of view, when that happens, 6 to 7 candles will break a higher low. This momentum seems to be over, and that particular swing could also complete the bigger swing at the same time if price manages to break above the 21 and 144. At this spot, I think price is still in a neutral zone. Why? Because if price goes sideways like this and makes a bear flag, then in that case, there's a good chance that price will break and continue with the downtrend. Okay, and in that case, we'll probably get a daily candle that can push through 111.80, and the target will be 111. So this bear flag is still a real possibility. And the fact that price didn't break this bottom doesn't mean that price cannot go sideways, make a flag, and then break to the downside. So what I'm looking for, from a reversal point of view, I'm looking for more impulsiveness to the upside, and that could only be confirmed if price manages to break above at least the 21 EMA, if not the 144 EMA, and show some momentum to the upside. What I'm looking for specifically is a break above this zone around 112.75. I'm looking for a hook back, pull back, and then a bounce, and then I'll be trading it to the upside. All right, but not before I see clear momentum. If I don't see this clear momentum, I would not be thinking about upside. This is neutral zone for the moment, and I would only be keeping an eye on a bear flag and break to the downside. Of course, if there is a daily candle that could push through, for instance, the 111.80, then that also will be a confirmation of more downside. I will look for a correction and a continuation down to 111, the previous bottom, the previous double bottom on this daily chart. And if price breaks that, then of course the next target is the round psychological level of 110. But there are some reasons why price could bounce here. If we look at the daily chart, for instance, then we can see that price is basically, let me show you, there we go. Price made a good bullish candle last month, and it broke above the highs of the month before. And if we look at the patterns, it could look like a falling wedge pattern. And if we look at the wave patterns, and price has broken above that. And if we look at the wave patterns, it looks like wave 1, 2, 3, 4, 5 has been completed, and the ABC could start. On a weekly chart, we see also reasons for a potential head and shoulders here like this. This being the left shoulder head and right shoulder, the head being a double bottom. And we see again that the falling wedge pattern. And either if price is not in a 1, 2, 3, 4, 5 and ABC, it could be in this 1, 2, 3, 4, 5 and in this ABC. All right. So I think there's solid arguments for potential bounce. But of course, I'm waiting for the market to confirm that. We're also still in this uptrend channel, although price is trying to break through it. So it's at the decision spot from this point of view. Relatively still at the bottom. So if price goes back into that uptrend channel, I would consider this a small overthrow or underthrow to be precise. And that doesn't necessarily change the perspective of this uptrend channel. So very decisive zone, 111.80 and let's say 112.80 in between that, neutral zone. But if price breaks finally, there could be a bigger trend taking place for up or down. All right, this is the pound dollar, and well, that looks different because as I mentioned in the video last weekend, this looks like a wave 3 potentially. This is a wave 1, 2. That means that price could be in a choppy corrective wave 4. And those typically retrace and respect shallow fibs like the 23.6 fib, the 38, max the 50. So far, price respected the 23 by moving up and then down from it. But here too, also here, time patterns are playing a role. 2, 4, 6, 7, 8 candles not breaking this low could indicate that it's likely that a bigger correction is starting, either some kind of bear flag or triangle or sideways correction. Of course, if price makes a more aggressive move up, that's possible too, to about 125.75, which I think is a strong resistance spot because of the 38.2 fib, but also because of the sideways price action here. Look at that momentum, sideways continuation. So typically that is a resistance zone. So either price goes sideways like this and then breaks the bear flag, I'll be looking for continuation lower. And I think that is a good with the trend swing setup for a target around 124.25. Or if price does move up more aggressively, I would expect price to make a bearish bounce at the 38, that I'll be looking for bearish candlestick patterns at that fib. On the daily chart, this downside, all right, is expected to go to the minus 272 target, which is also the bigger bottom. Look at this, the bottom right here of the daily chart, and that's a key level because if price bounces there, this could be wave A, this could be B, and up it goes all the way up back to the resistance for wave C. If it breaks, of course, then a full downtrend is in force. So very important how price responds at 124.20. Okay. Otherwise, if it does make a bullish bounce, this could be ABC. If it makes a break, this is 1, 2, 3 probably. All right. Also keep an eye on a trend line like this, for instance, with this resistance connecting the bottoms and this connecting the tops. Sorry, the other way around. Disconnecting the tops and disconnecting the bottoms. Okay. So that's something to be aware of as well. But otherwise, looking for a sideways zone and then a continuation lower, unless it breaks above the 50. Then, of course, that changes things. Then, in that case, maybe something else is going on. Maybe that downtrend that I have in mind is not going to take place. And, of course, if it breaks above the bottom of wave 1, well, that would invalidate the entire wave 1, 2, 3, 4 scenario. And in that case, something else is going on. Maybe we'll have to reanalyze it. Maybe we're getting that bigger bullish reversal after all. All right, folks, that's it for now. Thanks for joining. Of course, check out elitecurrency.com for more free material, free indicators, analysis, research, all of that you can find on our website. So check it out and wish you all good trading, a very good day, and see you soon. Cheers.